Economic storm is coming. Minsheng Bank cuts Beijing staff salaries by up to 50%. As the Communist Party of China calls for living a tight life, two sources familiar with the matter told Reuters that employees at the Beijing branch of China Minsheng Bank have faced salary cuts of up to 50%. As part of broader cost-cutting measures, Minsheng Bank has also stopped paying certain work-related expenses and other benefits at its Beijing branch, which is the bank's largest branch, employing over 4,000 people. The two sources, who requested anonymity, said these measures have been fully implemented at the Beijing branch, but it remains unclear if similar measures will be applied to other branches. These salary cuts, up to 50%, are the largest among China's major commercial banks in recent years. Minsheng Bank and China's banking regulator, the National Financial Regulatory Authority, NFRA, have not yet responded to Reuters' request for comment. Living a tight life. According to the BBC, the Communist Party of China promoted the slogan, "Living a tight life" in 2023 in response to fiscal revenue shortages as China's economy slows and shows weak recovery. Governments across China have issued regulations to align with Beijing's call, with civil servants bearing the brunt as salary cuts began last year. Financial institutions, both state-owned and private, have followed suit, implementing measures such as cutting salaries and bonuses and encouraging employees to avoid wearing expensive clothing to work. China Construction Bank, CCB, the country's third-largest commercial bank by assets, asked its head office staff to reduce their salaries by at least 10%, Reuters reported in July. Reuters also reported earlier this month that China Merchants Fund Management, one of the top 10 fund managers, asked senior executives to return compensation that exceeded a new cap imposed over the past 5 years. Minsheng Bank's salary cuts reflect concerns over profitability. Chinese lenders are under pressure to reduce loan costs as the economy grapples with a prolonged real estate crisis and teeters on the edge of deflation. Official data shows that Chinese banks' net interest margin fell to 1.54% at the end of June, a record low. Minsheng Bank, a second-tier joint stock bank, had total assets of 7.7 trillion yuan, $1.1 trillion at the end of last year, ranking 11th among China's approximately 4,600 banks. Founded in 1996 as China's first privately controlled commercial bank, Minsheng Bank has been severely affected by the ongoing real estate crisis. The bank is a major creditor of China Evergrande Group, which is at the heart of the country's real estate crisis. Minsheng Bank has also been impacted by the financial troubles of one of its largest shareholders, developer China Oceanwide Holdings Group. Co-Ltd Minsheng Bank's net profit fell 5.5% year-on-year in the first half of this year, while the non-performing loan ratio for its real estate loans rose to 5.29%, up from 4.92% in 2023. The mainland's youth unemployment rate rose to 18.8% in August, reaching a new high this year, with actual figures believed to differ significantly. On Friday, the National Bureau of Statistics of the Communist Party of China released the unemployment data for August. The national urban unemployment rate for people aged 16 to 24, excluding students, was 18.8%, marking a new high for the year. The overall National Urban Survey unemployment rate, regardless of age, stood at 5.3%, also the highest this year. From April to June last year, the youth unemployment rate exceeded 20% continuously, peaking at 21.3%. Following this, the authorities announced they would no longer release age-based urban unemployment rates. Starting in January of this year, the statistical method was adjusted to exclude students before the age-based unemployment rate data was resumed. However, given that the Communist Party of China has a history of manipulating data, and with the mainland's economy in decline, outside analyses suggest that the actual unemployment rate may be higher. Many experts believe the figures released by the CCP are unreliable and often falsified to downplay the severity of the situation. Several analysts, based on independent survey data, estimate that the actual youth unemployment rate in China could be as high as 50 to 60%. Moreover, the number of unemployed people across all age groups is rising rapidly, signaling that the Chinese economy is facing an unprecedented recession. Does the fiscal crisis threaten the regime? The Central Commission for Discipline Inspection calls for asset revitalization. As various regions in China are selling off assets to address debt risks, the Central Commission for Discipline Inspection, CCDI, has called on discipline inspection and supervisory agencies to step in, closely monitor the management of state-owned assets, and revitalize idle ones. Experts believe that this move may involve corruption and extortion, potentially triggering greater public resentment. The CCDI's directive serves as a warning in this context. On September 18th, the CCDI and the National Supervisory Commission published an article stressing the importance of revitalizing idle state-owned assets, claiming that doing so would significantly reduce government and corporate debt risks. The article urged discipline inspection and supervisory agencies to monitor the implementation of state-owned asset management, identify existing assets, revitalize idle ones, and improve governance of state-owned assets to promote asset preservation and appreciation. David J. Wong, a U.S.-based economist, commented, "The CCDI's article primarily addresses the loss of state-owned assets. With the economy in a downturn and state-owned enterprises under heavy debt pressure, the hope is to better manage and utilize these assets to repay debts and increase state revenue." Analysts note that this task should typically fall under the State-Owned Asset Supervision and Administration Commission, SASAC. The involvement of the CCDI suggests that the financial crisis may be serious enough to pose a threat to the regime. David Huang noted, "In the past decade, China has seen state-owned enterprises expand while private enterprises retreat. With this growth has come a variety of issues related to asset management and operational inefficiencies." Epoch Times columnist Wang He added, "Corruption is rampant within the CCP. The CCDI knows that revitalizing state-owned assets provides opportunities for corrupt practices such as embezzlement and profiteering, which is why they issued this warning." Some analysts interpret the CCDI's call as a directive for local governments to sell assets, mortgage assets, and raise funds wherever possible. On August 28th, the Bishan District Government of Chongqing issued a notice announcing the formation of a sell-off team to coordinate the sale and revitalization of state-owned assets in the district. Local Finance Bureau officials confirmed that the team has begun operations. Xi Tian, a professor at the University of South Carolina's Aiken School of Business, commented, "This highlights the severity of local governments' financial problems. As the Chinese economy sharply declines, local governments are resorting to selling assets to fill fiscal gaps. However, the market may not be interested in the assets the government is willing to sell, so this approach may not be successful." Experts believe that even selling off assets will not resolve local debt problems. On September 13th, the Chinese government publicly disclosed its debt report for the first time, revealing that by the end of 2023, the government's statutory debt exceeded 70 trillion yuan. Concerns are rising that under heavy debt pressure, the government's asset sell-off may ultimately burden private enterprises and citizens. China's economy continues to stagnate, and a wave of unemployment has swept across the country. All industries are facing unprecedented survival pressure. Every year, tens of millions of graduates enter the job market, but job opportunities are extremely limited. Security guards are getting younger, and even delivery workers are graduate students. But with only a handful of jobs available, people are under immense pressure and uncertainty. She said in the video, "I was laid off." The collapse of an adult is the feeling of being instantly beaten back to your original form. When I was talking to them, I actually had a hunch that I might be laid off. Although I had been mentally prepared beforehand, when I actually walked into the office and heard them say it, I still felt a sinking in my heart, and a chill came over me. That feeling made my brain go blank in an instant. They probably wanted to reduce costs and increase efficiency. I didn't say much and didn't dwell on trivial topics. I just walked out. Sitting outside, I took a long time to calm down, but I still couldn't. Suddenly, I started thinking about next month's rent and all the other expenses. I would soon have no source of income. In the past, people always complained about how hard it was to work overtime and how exhausting work could be. Looking back now, what's really terrifying is not having a job, because that means losing financial security all of a sudden. I had already submitted some resumes, but finding a job nowadays is too difficult. First, there's the age limit, followed by educational requirements, and then the need for various skills. Each one is very strict. The woman in the video had lived in Beijing for 5 years. That morning, she had happily gone to work, but unexpectedly, in the afternoon, she received a layoff notice and was asked to leave immediately. She had just finished breastfeeding and was suddenly unemployed. The news caught her completely off guard. As a 30-year-old mother with both an elder and a young child, her monthly expenses are at least 20,000 yuan, which makes her life very stressful. This year in Beijing has been extremely tough. She and her husband both come from small third and fourth tier counties, and their only way out is through hard work and perseverance. Seeing her parents doing their best for them, she knew she had to cheer up quickly and not disappoint them. It's reported that in recent years, 460,000 companies have closed down, 3.1 million individual businesses have been deregistered, nearly 800 million people have fallen into debt, and the number of unemployed has exceeded 23 million. Many large companies can no longer operate. According to a report by the Seoul Economic Daily on September 3rd, Samsung Electronics prospects have become uncertain due to fierce competition in the Chinese market and weak domestic demand caused by the economic downturn. As a result, it has decided to take restructuring measures to meet these challenges. An internal source said this layoff is just the beginning, and the layoff ratio may reach 30% by next year. The company plans to lay off some local employees in China's sales division and indirect support staff by 2025. And the process has already begun. These layoffs primarily target locally hired employees in Samsung Electronics' China sales department, which has shocked and upset many employees. Previously, IBM China also announced it would close its China R&D department, impacting over 1,000 employees. IBM has faced significant operating pressure in China in recent years. In some locations, there are no projects at all, and layoffs have been ongoing. The relocation of IBM's R&D department actually began about 3 or 4 years ago. It's reported that IBM has experienced considerable operating pressure in the Chinese market in recent years. In 2023, IBM's global revenue increased by 2%, but its revenue in China dropped by nearly 20%. Experts believe that the withdrawal of foreign companies like IBM is only part of the larger trend of decoupling between the United States and China. In the future, as the U.S.-China technology war continues, U.S. restrictions on China may tighten further, and the operating environment for foreign companies in China could become even more challenging. A netizen claiming to be an employee of the SAC Commercial Vehicle Technology Center disclosed online that the proportion of layoffs at SAIC Maxis's Nanjing branch could be as high as 40%. It was also revealed that the HR director had arrived in Nanjing and started holding one-on-one meetings with employees. Reportedly, in addition to the power department, many other departments within the company are at risk of layoffs. Another source said Dongfeng Honda plans to lay off 2,000 employees and offer compensation of N plus 2 plus 1. N represents the number of years the employee has been in service, with each year corresponding to 1 month's salary as compensation and no upper limit on the number of years. In the first half of this year, Honda sold 415,900 vehicles in China, a year-on-year decrease of 21.5%. This was the largest drop among the top 3 Japanese car brands. Coincidentally, Alibaba's May financial report showed that the company had laid off more than 14,000 employees. And JD.com announced on May 21st that it would lay off 12,000 employees. Taobao recently laid off 20,000 people. In a video, a man said, "Another news story has been reported in the past 2 days. Brothers, you should have seen that Taobao is laying off more than 20,000 people. This will be the 7th or 8th time this year. A company this big is undergoing large-scale layoffs." Additionally, Lenovo Group's financial report mentioned that it would lay off 7,500 employees, while Li Auto laid off 18% of its workforce, impacting around 5,600 employees. FAW Volkswagen's Foshan plant laid off nearly 17% of its staff, and Guangzhou Automobile Honda reduced its workforce by 1,700. Even the large state-owned enterprise Wuhan Iron and Steel Group reportedly laid off about 290,000 people. This wave of unemployment has caused widespread concern and anxiety. Others have noted that layoffs have been widespread in Shanghai. Shanghai Waikiki Sipu Company laid off 1,700 people, and Tesla's layoffs are ongoing. Some netizens pointed out that it seems nearly everyone working in Shanghai knows someone who has been laid off. After being laid off, it is very difficult to find a job with the same salary, especially for those over 35 years old. Often, even if you get an interview, the written test questions can be too challenging to handle. Due to declining birth rates, kindergartens and primary schools in Shanghai, Guangdong, Wuhan, and other regions are facing a shortage of students, leading to school closures. This year alone, 9 primary and secondary schools in Shanghai have stopped enrolling students or shut down completely. Some family members of teachers in Guangdong revealed that a cleanup of teachers is underway in the local area. As drastic changes in the demographic structure deeply affect the education system, the teaching profession is also facing the serious challenge of layoffs and downsizing.